Hi everyone, welcome back to the Learn, Invest, Grow show. Adam and Tay are here. In the classic model for retirement, many people put most of their retirement saving into stocks and bonds each month, and as they get closer and closer to retirement, they transition from the higher returns of stocks into the higher stability of bonds, and you slowly build up a nest egg over your career, then gradually spend it down in retirement. And hopefully, you don't outlive the money. Then the Adam and I are a big fan of real estate investing, as you already know. And then we like to discuss today how real estate investing can help you better prepare for your retirement. Because we've come across many wealthy and successful people, and one place that we've seen success in wealth building time and again is in real estate. So yeah, why don't we talk about some of the advantages of real estate investing for retirement and kind of compare to traditional investment vehicle like stock and bonds. Hey, so Adam, I know you have a lot to say about the
Yeah,
stocks from your own
yeah,
experience. Yeah.
yeah. All right. So, look, from my experience, from myself and watching my father, for example, a retired dentist. He always told me stay out of the market. Meanwhile, he was in the market. I got into the market myself. But the one thing I think I mentioned this before, and I'll say it over and over again. The reason why he was able to retire and stay retired and survive multiple cycles is because of his real estate holdings. If he would have just been invested in the market and followed his broker, he probably would have been broke. And that's just a fact. He dabbles with options. He does a lot of stuff. And look, to be frank with everyone here, the market is controlled, it's manipulated. Um, Retail investors like the Robin Hooders are when GameStop will happen, they want to blame the broker. Look, blame yourselves. The market is the odds are stacked against you. Really, you're getting into something that you don't know anything about, and you're following a bunch of retail traders, and you really got to look at yourself. Because you're getting into something that it's just really don't understand. I'm guilty of it too. I'm guilty of investing in penny stocks, buying, doing trading options. And, I'll admit, I blew myself up years ago, but it was a lesson learned. I did it at a very young age, living with my father. Made a lot, got hooked, thought I could be a trader, thought this is easy. It was beginner's luck. It really was. I mean, I turned a little bit of my money to a lot of money, started dabbling, trading, thought I could be, and then the anxiety levels went through the roof. But the best thing that ever happened to me was to lose it all and to realize that real estate is the key path to success. I went back to grad school. I was actually in grad school, quit grad school to be a trader. I was in message boards. I was in groups and this and that. I thought this is like, I would literally go to bed studying, wake up in the morning studying. And and I have write-offs. I mean, I have tax losses that I get no benefit from. I mean, the amount of money I lost, I would get like free rooms and all this stuff, in the casinos, and I get nothing. I get like, was it $3,000 a year? It was a joke, and it's gonna be for the rest of my, But point is that look, I'm not saying you can't make money in the market. What I'm telling you, what worked for us, my father, for example, he, real estate, cash flow, tax benefits. That's what helped him. Look, can you lose money in real estate? Absolutely. What hurts people in real estate is over leverage. You over lever in real estate, not have enough reserves. You got to have enough reserves to cover when things happen. Things are going to happen. You're going to have problems. It's the headache business. And that's why my father was okay, because he always had money aside to cover things that happen. He was never over leveraged at all.
Mm.
And that's why he was okay. So 2008, market turns to crap. His stocks, yeah, they went down, whatever. But he had real estate that he had a lot of stuff paid cash. I mean, that's, he bought a brand new house in Coltec, cash, bought a lot of stuff cash, you know. So yeah, he wasn't affected. Leverage, yeah, it does help, but you got to use leverage responsible. A lot of owner operators that are levered to the max, they're basically hoping everything goes perfectly. And when things go wrong, now they can't pay their lenders, they can't pay their investors, whatever, and their business plan blows up, and that's when they go under. And what happens? You have a new transfer of wealth. They sell their assets to someone else that buys it at a discount, and now they're the new owner and they're riding it to the next cycle. Things go in cycles. Another benefit of real estate is it doesn't basically it's slow to react like the private real estate. It's slow to react like the stock market. Stock market, look, you ever watch like the news and like, oh, the earnings and this is good, employment is great, and this and that, and the market goes up a little bit and then boom, down. Earnings releases are complete. Doesn't mean anything. So basically, like, no one can figure out the market. No one knows where it's going. You're at a huge disadvantage with the market, with high frequency traders, insider trading, all this stuff. Us point and click traders at a huge disadvantage. And enough about that. You talk to a financial advisor. Hopefully they teach you. They teach you more about real estate or something, other than just the public markets and but going back to real estate, it's easier to figure out, it's easier to underwrite, it's easier to predict. Okay.
Yeah,
Private
absolutely.
real estate, especially you stick to resident. I mean, residential is very easy to figure out. There's other asset classes too. Will hospitality come back? Hey, there's opportunity funds going in and they're buying up hospitality assets. Why? Because they could get it at a huge discount. They know it's going to come back. They know it will. So it's another transfer. A lot of the hospitality operators, the reason why they're hurting is because leverage. They don't have enough money to cover, so they got to sell off everything at a discount. And now they're doing like sale leaseback. They're doing like seller financing, which is that was another strategy I was reading about with the whole hospitality. But look, real estate, there's tax benefits, there's cash flow. You don't have that in
cash flow.
Equity.
I like to elaborate on the cash flows, right? Yeah, it's another advantage. Yeah, you'll get to definitely enjoy an ongoing income with real estate investing. So when you invest in paper asset like stocks and bonds for retirement, you typically need to decide how much of your portfolio you feel comfortable withdrawing to live on each year. So your net worth may shrink over time as you sell off stocks and bonds. On the other hand, the real estate investment income, whether in rental income or cash distribution, keeps coming time after time without having to touch your assets. So you don't have to sell rental
hopefully
property.
It's coming. Look, there's gonna be
yeah, of course. Yeah.
It's not gonna always come. Look, you're gonna have problems. Okay. But the thing is,
definitely there's a problem. Yeah, right. Yeah.
Look, you can have fluctuations, you have leases.
Yeah, the bottom line is you don't have to sell the property or investment shares in a fund or syndication to generate income. Yeah.
Well, yeah. So hopefully, most of the time, if you're smart, you're not the worst position to be is a forced sale. A forced sale, meaning you have to sell because you have problems on another asset. Lenders are calling their loans or whatever. You're getting things happen, so you have to sell this. And look, this is what's happening now is a really weird situation with this pandemic where we're seeing a lot of sales. A lot of sales happening. Buyers are coming in. And you have a lot of people jumping into and they want to they're looking to invest in real estate. It's never going to stop. You're never going to have people not buy. The only difference is that when you're motivated, you may be forced to sell at a discount. Another thing to keep in mind is I could just ramble on all day about this stuff, but another thing to keep in mind is that just be careful who you're talking to. There's a lot of people that give advice. Just make sure you're getting good advice. And, if you have a financial advisor, make sure, like, I just know from our experience, they're always trying to sell us these, another funny thing was, I remember talking to someone, a family member, about buying a stock that was like $9 a share. And what's funny is that I was studying this company a lot. I kind of knew a lot because I was studying. I did a lot of research. I would call up people at their, this biotech company, GW Pharmaceuticals. I remember that. Now it's like trading like $200 a share. But I did a lot of research on it. And what's interesting is I remember I was talking to someone, and the reason why he couldn't recommend it to his clients because the analysts at the bank or the bank or company that he's working at, they weren't following it. So they're afraid of getting sued to recommend a stock. This is when it was like $9-10 a share, when they just had their IPO, and Then Kramer gets on and recommends that, like, I forget, don't quote me on this, but I think it was like $100 a share. It's like, yeah, buy. You know, another thing is I just saw, remember EXP Realty. He was saying this is a company to own last week, and then the stocks dropped like a tremendous amount the past this week. It's already been getting killed. You know, he just recommended buying it, and the stock took a huge hit. So people probably follow that. Like, oh, yeah, I'm going to buy. He recommended it. It takes a huge hit. You know, I'm not, but I think long term that stock's going to be good. I think long term, if you could ride out the volatility, you always have volatility. I'm not saying don't buy stocks. It's just be careful of gambling. You know, Warren Buffett's great. He has great recommendations of how he does it. You know, and that's a whole other subject. But again, real estate worked for us. I love the tax benefits, love the cash flow. There are going to be problems, but you just have to be prepared to deal with them. And that's if you're an active investor. If you're a passive investor, you just make sure you're dealing with an operator that knows what they're doing, know how to vet the operators, there's a whole process on that. And we have a blueprint on that as well. We could share with you, on how we vet, and we're going to expand on that blueprint as well, because that was just basically a very high level view. And we could go more into detail, what to look for, what to do, because there's many different ways to look at how they're structuring deals and how they're structuring the capital stack and the type of debt they're securing. And there's a lot of factors to look at, how to mitigate risk. Tay, anything else before we end?
There's one thing I like to add. So, I mean, with the real estate investing for retirement, I mean, the one thing definitely I like about real estate investing is that you get return adjusted for inflation to some degree. So, I mean, a property owner can raise the rent each year, either to keep pace with or go above inflation. And also important to notice that your monthly mortgage payment really stays the same. It could locked in the past. So even as your rent grows, compound, it still stays the same. That creates a kind of widening gap between your rent and your mortgage payment in your
Yeah.
favor. So for example, you buy a property that rents for $1,000 and you refinance it with the 500 monthly mortgage payment. So if you raise the rent by 3% after first year, equivalent of $30, the gap between your mortgage and your rent, which was initially $500, now it goes up by 6% instead of 3%. So over time, you'll be better off as that gap grows even faster. But by comparison, bond investors have to subtract out inflation to calculate their real return, right? So if a bond pays a 5% interest for a year, but inflation grew at 2% that year, then your real return was only 3%.
Yeah.
Unless you invest in inflation protected security. So
100%.
there's another advantage of real estate investing.
Another thing too is we should mention is what's really interesting is we actually had a webinar last week with Adam Bergman. It was awesome. Basically, really in a nutshell is that most people don't realize it or know, and most of the people that hopefully they're telling you, your FAs, but they probably won't, because of their own personal interest of basically they can't make money on it unless point is that you could invest in real estate with your IRA. There's certain rules you have to abide by, but you could do that. My father does it. He does it passively, at least. And that's another beautiful thing about being passive, is that you don't have to deal with all the headaches. The people that you're investing with, they deal with all the headaches. And there's going to be problems. There always is problems. Whether it's retail, office, whatever it is, there's always problems.
Which you can talk about in the next episode, right? The tenant issue.
Yeah. There's always going to be problems. You're never going to. But the thing is that as long as you are responsible when investing, you have enough capital to cover problems. That's where people end up in trouble in real estate. Any type of investing. I mean, even stocks, you could margin, you could leverage and margin calls, and you either have to infuse cash or sell securities to cover that. And that could be so. This is just basically, look, real estate for retirement. It worked for my father. He was able to retire at an early age and stay retired, not have to go back to work. The stock market, yes, he was invested in that. I am guilty of investing in it, but that's not my wealth builder. That's just something I look to hopefully make some money in that, but that's not my retirement plan. Investing in the market. That is just my own way of seeing what worked for my father and others, is that real estate is the real way you could build wealth, you could keep your wealth, and now what's really interesting is you could take advantage of the tax code and investing in a tax sheltered vehicle where now you could compound your money in real estate with your retirement monies, and that is awesome. And if you have any questions, feel free to ask, and don't forget to like, share, and subscribe to our channel. And Tei, anything else you want to mention before we go? Because I know there's a lot of stuff we could cover, and we could always save it for the next video.
Yeah, we like to just summarize some of the benefits we did discuss. So there's an ongoing income benefit, and then getting returns adjusted for inflation, and also the predictability, right, of the returns compared to stock market, and the power leverage.
To go back, ongoing income, yes, but remember, it could fluctuate. You have
of course, yeah.
You have income coming in, but it's not like guaranteed income. Nothing's guaranteed in this world.
Yeah.
Except death and taxes. That's it. But the rehash, yes, you have cash flow, you have income, but and look, you're gonna have fluctuations because you're gonna have leases mature, tenants move out, you bring in new tenants, maybe you have a tenant that doesn't pay. Now you gotta deal with that. There's problems that happen, but you have a hard asset. It's not a paper asset where a company could go belly up. Look at Enron. Look at Lucent. People thought they had great company, and then they had nothing.
Go worthless, right? Yeah, overnight. Yeah.
Yeah. So, and remember, when you're investing in a stock, it's common shares. It's the most riskiest investment of all. You know what gets paid before you? The debt, the note holders.
Yeah.
Preferred equity, they get paid before you. You're last to get paid. If there's anything left, you're not going to have anything left when you're a common shareholder. Just remember that when you're buying stock on Robinhood or you're buying common shares. It's the riskiest thing you'll be invested in. What do you think your 401k is invested in? And talk about the baby boomers that are ready to pull out. What do you think is going to happen to that market? So something to think about. We could talk about that another day. But yeah, we just want to educate people because we're not the mainstream media where we're told what we have to promote. This is us, and we could talk about whatever we want, and we could tell it how it is.
Yeah.
So until then, happy investing, everyone. I hope everybody has a great day, and I'm looking forward to the next video. But please give us ideas, and we'll be more than happy to elaborate and talk about whatever topic you like. Thanks again, everybody. Bye now.
Yeah, thank you. Take care, everyone. Yep.